Hello, everybody, and welcome to today's special webinar event. I'm Terry Ryder, founder of hotspotting.com.au, and today I'm speaking to Tim Graham of Reventon on a topic that's arguably the most pertinent of all topics in Australian real estate at the moment, and that is why the regions are outperforming the capital cities. Now, let's be clear, the capital cities are doing well. The price data from Domain, from CoreLogic, and from SQM Research recently shows that right throughout the pandemic period, city markets have held up well, particularly the smaller capital cities. And the latest price data shows that all capital cities except Melbourne had price growth in the September quarter, and all capital cities, including Melbourne, have had price growth in the past month. It's just that regional markets are doing even better. Every data release shows that. And today, Tim Graham and I will be discussing why that is, what's driving the resurgence in regional markets that's actually been underway for several years already, and which continues to dominate real estate commentary today. Now, my special guest today, Tim Graham, is from the multi-layered property advisory Reventon, and is ideally placed to talk about it because he's living it and breathing it every day. So, Tim, welcome. How's it going?
Well, look, this week's a very different week to the last couple. We're back in the office, so everybody's, we've got a bit of a buzz in the office. I think everybody's excited. So it's a shame there's only 6 weeks left of the year.
Yeah. So tell us a little, before we sort of launch into the detail of the information we want to present on regional markets, just tell us a little bit about Reventon, who you are and what you do.
Sure. So Reventon started in 2005, so we celebrated our 15-year anniversary this year, probably from the comfort of our lounge rooms, unfortunately. But we essentially are a holistic financial services business. So we offer everything from residential finance, accounting, financial planning, property investment, and property management, all under one roof. So we're a national company in that we service everybody nationally, but our head office is here in St Kilda Road. And essentially what people like about using a service like ours is they've got a 1300 number, they can dial into that number and they've got all the different professionals under one roof. So rather than have to shoot across town to see a mortgage broker on one side, financial planner on the other, you call a 1300 number or you come in for your 6 monthly reviews. We do all under one roof.
Okay. Yeah, the topic today, we're going to be talking about why the regions are doing better than the capital cities, even though, as I pointed out, the capital cities are doing pretty damn well as well. But what I find is there's still a lot of resistance from investors, the idea of investing in the regions, the notion that you've actually got to be in the big cities to get the best growth. Is that something that you come across at Reventon?
Look, as you know, Terry, we've been focusing on regional areas for a long time now, well and truly before a pandemic. But, it's one of those things, I think once, there's always those investors that, need to be able to, drive past their house and they drive past their investment and wave to the house, knowing that it'll never wave back. So there's always a bit of resilience with people like that think that they need to buy something that they can drive past and constantly keep an eye on. But as soon as we start to get past that and ask them what it is they're trying to achieve, the goals that they're trying to achieve, they realise that, maybe buying something around the corner from their place is not the best answer. Once we start drilling into the research that our team put together and start to run the numbers, it just makes sense. And I'm not talking, in today's market, it just makes sense. It's made sense for a long time now.
Yeah, and we always like to tell people that that investing in good regional centres is a win-win-win situation. The first one being low buying prices, the second one being better rental returns, and the third one, great prospects for growth. And we're seeing that increasingly in the data that there is great capital growth to be had in the regional centres.
Yeah, absolutely. And as I say, I might be a little bit biased being a country boy myself, but there's so many prospects in these regional areas that just get overlooked by a lot of people living in these cities because their idea of what a regional city might look like is very different to what could be the actual case. So if you're looking at some of the markets around Australia, they're not tiny little rural areas we're talking about. When we're talking about regional areas, we're still talking about big cities. Your Geelongs, your Ballarats, your Bendigos, your Sunshine Coast, even some of the markets like Newcastle on the New South Wales coast. These are big areas with really strong local economies.
Yeah. Now, what we would like to do first up today is present some evidence to show people just how well regional markets are doing. With what I do at Hotspotting, I like to think that there's two distinct types of evidence. obviously you've got statistical evidence, but actually I place a lot of stock on anecdotal evidence. The statistics tend to be backward looking, and they take time to come through the system to tell you what's happened in the recent past, such as price data. I value very highly talking to people at what I call the coalface of the industry. People, be they advisors like yourself, buyers agents, selling agents, valuers, and particular builders and developers. People are there at street level, and it's interesting to know what they're telling us, because they're reflecting what's going on right now in markets. And the conversations I'm having with real estate professionals all over the country right now is very much the same message, that markets are really busy, they're really competitive, there are more buyers than sellers, there's very low vacancies, there's more tenants than properties available to rent. Yeah. And some of these markets, particularly in the regions, are absolutely pumping. And I'm sure you're encountering that with what you do as well, Tim.
Absolutely. I mean, on so many levels. I mean, I've only got to jump on your social media and see friends that are moving interstate. So, I mean, there's been a lot of speculation about this in the papers. But if you look at the numbers last month, it's the first time in a long time, Victoria and New South Wales, we lost population. That June quarter, we lost population, which is probably going to southeast Queensland for a lot of that. But then internally within those two states, we can definitely see that people are choosing lifestyle and affordability over their $800 to $1 million mortgage sitting here in Melbourne. They're choosing to commute to make the shift down to a regional area like your Geelongs. You're 15 minutes from the Great Ocean Road, and you're sitting there with a $400,000 mortgage. So there's been no doubt that that's been a play for the regions for a long time. But during this pandemic, people are really starting to weigh up whether they need to sit in traffic for an hour and a half every day, 3 hours in some cases. I know specifically for Melbourne, I think in the last 5 years, there's been 110,000 extra cars hit the road just in Melbourne alone. So, you're thinking, it used to take you an hour and a half one way to get to traffic, and now you can work from home. It makes sense for you to be, sitting 15 minutes from Torquay, doesn't it?
Absolutely right, and we'll talk in a little while about some of those reasons and other reasons why this trend has been gathering speed. It's been underway, as you and I both know, it's not just a pandemic. The media's tended to portray this trend to the regions as something that's been created by the pandemic period. It's actually been underway for a number of years, but perhaps it's been turbocharged by the pandemic. It's turned what has been a steady drift into something like a stampede. Yeah. But I thought we could just quantify in terms of what's been happening with prices, the claim that we make in the title for today's webinar, that the regions are actually outperforming the capital cities. So I've got a number of different statistical sources that we could refer to. One I've got here in front of me, it's actually from Simon Presley from Propertyology, who's a wonderful real estate researcher and analyst. I would say the best in the country. I really love his stuff. And he produced this very nice graphic which showed how the regional markets have performed over the past 5 years compared to their capital cities. And it's very stark evidence that across the country, regional areas have been outperforming their capital cities, not just during this pandemic period, but actually for the past 5 years. So we've got some data here that shows how much Sydney has grown over the past 5 year. Prices in Sydney are up on average about 22% over the past 5 years, bearing in mind they had a boom and then there was a correction after it. But there's a very long list of regional markets that have actually done a lot better than that, double that level of growth that Sydney has shown. Byron Bay, Ballina, Coffs Harbour, Port Macquarie, Newcastle, Wollongong, and many others. Similar in Melbourne. Melbourne's shown good growth in the last 5 years, about 40% up compared to 2015, but markets like Geelong and Ballarat have actually done better than that. And in Queensland, Brisbane showed moderate growth, but the Sunshine Coast and the Gold Coast have done considerably better than Brisbane, and that's over 5 years. So it's not something, it's not a flash in the pan thing that's happened in just the in this period that we've seen this peculiar circumstances with the pandemic. It's actually been a trend that's underway with some long-term legs to it.
Absolutely. Look, I can see it here, even construction sites here. I speak to a lot of friends and family even that work on construction sites, and they say half of the people that are working on these Melbourne sites are commuting from Geelong every day. That affordability play has been there for many years now. And, if we think about it from an investing point of view as well, Terry, you've got, the ability to, buy a property in Melbourne. You're going to be entry price for a 4-bedroom home is going to be close to the 700,000 mark. When you're still focusing on paying off a mortgage on your own home, we want to keep that investment debt as low as possible. The regions are offering an opportunity to, even under the 500 mark, to get your first investment, or even second and third investments under 500,000 that are going to rent for, close to that dollar per thousand rent. So they're paying their own way. You focus on paying down your own mortgage. It ticks the boxes.
Yeah. Okay. So turning to that was some information in effect the past 5 years from Propertyology. Looking at the most recent figures from CoreLogic, they at the start of each month they publish their price report for the previous month. So we have the figures for October, and it shows that in the month of October, the combined capitals rose 0.4%. I think 7 of the 8 capital cities showed some level of growth, but the regions actually rose almost 1%, so more than double the growth in October of CoreLogic. But that pattern has also been seen in the year to date, with the regions up about 4% compared to the combined capitals up about 0.6%. And in annual terms, the last 12 months, the combined regions are up 5% compared to 4% of the capital cities. The best annual growth over the last 12 months have actually been regional Tasmania, up 7.5%. Also Darwin's risen 7.5%. Regional New South Wales up 5.5%. Those are the top growth rates for the past 12 months of any markets, including capital cities in Australia. And there are plenty of regional areas that we know that have individual locations that have done better than 20%. The Sunshine Coast has some absolutely outstanding performers, where median house prices in individual suburbs are up close to 30%. And there are examples like that. Some were published by Domain about a week ago, making the same observation that we are, that the regional markets are the outstanding markets in recent times in Australia, with some locations showing that very high growth levels of more than 20%.
Just quickly on that though, how accurate are those figures? What happened to the 40% drops that they were talking about?
Well, exactly right. I mean, as a point,
that was demanding all the headlines.
Well, that's right. I mean, and there's a great problem, for property investors getting good information because of the nature of our media. We're not really getting very clearly this message that you and I are discussing today, that we've had growth in major markets across Australia right throughout this pandemic period, and that the regions are outperforming the capital cities. That message is not being clearly got through by media. They're more interested in writing negative headlines. And yes, we've had since March, we've had repeated headlines of people, economists in particular, happy to line up and predict massive collapse of property prices because of the pandemic. Well, it just hasn't happened. In fact, the opposite has happened. We've had growth in most markets throughout this period.
The interesting part with that as well, like that, we talk about resilience at the start of this call, how resilient our market's been, but we've got to remember as well, that's with no external influence of offshore, and that's a massive factor. Our borders are going to remain closed for some time, and we're not propped up like we were back in 2017 with all this international investment. And I think that's a really big thing that's not getting reported on either.
Yeah, I think that the markets have done better than be resilient. Resilient kind of implies that they're sort of hanging tough. They're not that they're resisting the pressures to fall. The markets have done better than that. They've actually risen. Most locations around Australia have actually shown good growth, and some have shown spectacular growth. And it's showing up in all that data we're presenting, whether it's from CoreLogic or Domain or SQM Research. As we go forward, I think it's actually going to get stronger. I think the evidence is there. A real estate boom is actually building in Australia, particularly when you talk to people at street level. The real estate professionals at the coalface are just telling these stories of incredible outcomes where a property is listed, its first open house, there's 50 or 70 parties come through, there's 20 or 25 offers made on the property, and it sells for more than the price guide. We're getting similar stories about rental markets where places are renting.
That's what we're seeing on the rental market as well.
Yeah. So it's incredibly strong markets. And I think that we're going to talk about the reasons why in a moment, why the regions are doing so well. But I think there's also an additional element coming into to even further enhance what's already underway, and that is the big infrastructure spend, which is being brought forward by federal and state governments. So Tim, let's talk about some of the factors that are driving this very strong trend that's been underway for some time, but it's certainly picked up pace this year. The one we call the exodus to affordable lifestyle. As I said, being portrayed by media as being about the pandemic, but it's really been underway for longer than that. It's actually been driven by technology, the ability for people to work remotely and to access the lifestyle they want at a much more affordable price.
Mm-hmm. So again, that's something we've been getting reported on for a long time, but it's become very apparent through this pandemic that that's the new topic that everyone wants to talk about. But the affordability of Melbourne and Sydney is just not there for so many families now, especially trying to enter the market for the first time. It's just not possible. And as I say, if you look at the research that's been done on the amount of time sitting in traffic. People have given up well before the pandemic and working from home. They're giving up on that, and they're choosing lifestyle and choosing affordability, moving to areas where, Geelong and Ballarat are great examples. You can be back at Southern Cross Station within an hour and 15 minutes. You've sat on the train and watched Netflix. You didn't hit a single red light. It makes sense to me. We've got some staff down in those areas as well. We manage about 400 properties in the rental market, and we talk to them on a Friday when we do our Zoom calls, and we say what's on after work, and they say I'm shooting down the beach. So we're stuck in lockdown here, for many of those months, and they're sitting down there with none of these stage 4 restrictions, heading off to the beach. So. I think one of the things that's been really prominent with these areas, though, is that infrastructure that's happened over the last few years. So, when we talk about the commute times, that's a big thing. But second to that, the amount of money getting spent on these areas in health, it's not just the affordability play for the younger generation. I think there's a really big affordability play for the downsizers as well. There's a lot of people that are approaching retirement that haven't had the superannuation balances they require. They have made money in real estate here, selling down that home, buying a place for half the price down in Geelong, debt-free, and then cashing a bit more into superannuation. They wouldn't consider that if there wasn't great health in those areas and great transport nodes to get back into Melbourne to see the family. And that plays a really big part in this.
Yeah, I think that's a very important point. People are attracted by the affordability of the places they're moving to, but it's not just about affordability. They're not just looking for a cheap place to buy. They want something with a lifestyle, and they want something with good infrastructure. And so, and downsizers are a massive force in the market right now, and they particularly want to be somewhere where they do have access to good medical facilities, and many of the places that we have mentioned already and will talk about as we get further into the webinar are places that do have very good medical services. I think in the city of Greater Geelong, the biggest employment sector now is health and education. Wonderful in Bendigo, which is a classic example of this trend. They a couple of years ago opened a new $700 million hospital, and Sunshine Coast, which we will touch on later as well, a $2 billion hospital was opened a couple of years ago. So these are
the Ballarat hospital, 460 million.
Yeah. So those sorts of events are really, really important to this trend. People are moving to the places that have the infrastructure in place or where it's being injected. We're talking about locations with substantial, quantum size to them, good infrastructure in existence, but also spending on new infrastructure. I also think that one of the factors that's noticeable about the markets that are doing well, and it's some of the smaller capital cities and it's many of the regional areas, is that the whole virus thing, the areas that where the virus hasn't had such an impact, or was got under control early and firmly, and life has been actually proceeding pretty much as normal throughout most of this year. I think that's also been a factor because it's allowed economies locally to pump stronger, and local residents and consumers are more confident.
Absolutely, there's no doubt about that. I think you only got to, not that we can commute to these areas at the moment, but you're speaking to family that are living in regional areas, and they don't know what you're talking about when I'm saying we're stuck indoors for 4 days and you're wearing your mask every time you step out your front door. That wasn't seen in so many of these areas. I mean, when I say that, certainly they had some precautions in place, but certainly not to the weight that you've got down here. When you're thinking of sending your kids off to school in the morning on a tram, it's a very different story to sending them to walk to school in a regional area, isn't it?
Yeah, I think it's a big factor, and it's noticeable that those places that have, life has been proceeding pretty much as normal for the last 6 months. Some of the smaller capital cities, as well as the strong regional areas, it's been a factor. Another very, very big standout feature of some of these markets that we're focusing on is that vacancy rates are not only low, but they're ultra low, and in some cases the lowest they've ever been since they've been keeping records, and that's a factor as well.
Yeah, look, as I say, for us, especially with the, we don't just help our clients find a property to invest in, but we manage the whole process for them as well, from finance, accounting, financial planning, through to property management. And as I say, with our 400 rentals that we've got at the moment, I think at the peak of the pandemic for Victoria, which I'll call probably July, that was at that point, I think the most we had in the way of tenants in distress was maybe three tenants in total. And every time we opened a listing, I mean, there was a couple of properties within Melbourne specifically that were a little bit harder to rent, but anything regional. I mean, our stuff in Ballarat, it's listed before it's tenanted before we list it in some cases, because you've got a waiting list. So there's absolutely no doubt that trend has been really, really strong through the pandemic with these regional areas, which has been a bit tougher down here, especially when you lose in metro areas, you're losing all the international students and things. A lot of these apartments in Greater Melbourne, that's what, the demand in these areas a lot of time are to that younger students, and a lot of them are off overseas. They just haven't come back.
Yeah. Look, we think vacancy rates is a really important indicator, because what we're always looking for at Hotspotting is a forward indicator, something that tells us what's going to happen in the future, whereas most of what gets published in media is backward looking. It tells us what's happened with clearance rates recently and what's happened with prices in the last 12 months. Vacancy rates, I think, is a great forward indicator, because where vacancies are very low, rents will rise, and in that climate, prices will follow. We've seen that with our research over decades, that's a very clear pattern. So what we know to be true is that right throughout regional Australia and some of the smaller capital cities, vacancies of 1% and lower are actually the norm now. And anecdotally, whenever we talk to people who are on the ground in some of these places, they're not only telling us how much demand there is at open houses for properties for sale, but how much the queues outside places that are made available for rent. There's such a shortage at the moment. And that's, I think we actually have a rental crisis in this country at the moment. It's not really getting much play in the media. But from the viewpoint of the investor, it's a great time to be an investor owner, because your chances of getting a good tenant paying a really strong rent are so much enhanced by the vacancy rate situation at the moment.
Yeah. Well, listen, when you talk about forward indicators, I often do still look at history. And I'll look at that and then say, okay, what can we look for from that history, and then look at that into new markets and see what those forward indicators look like. And I really think Geelong is a great example of that. We had some tremendous success there with our clients, and obviously Armstrong Creek specifically, 3 years in a row, double-digit growth. We were selling 4-bedroom homes, not so long ago with the 3 in front of it, 380,000, 390,000, that were renting at $380 a week. So incredibly strong yields. Fast forward 5 years, those properties are now, selling for 580,000, 600,000. Right now, the rents haven't followed as well in that market, and the reason for that is they had so much land. Right, so I always urge people, when you're doing your research, you also want to see just how much land is there to be available thereafter. Right, so right now, if you're looking at that same market and you've got to enter the market at 580,000 for a 4-bedroom, you're going to be looking at maybe 440 a week in rent. That's a big difference to that 380 play. But, if we look at what gave that Geelong that growth, we look at really strong population growth that they had for years. We were first selling there when Geelong was on the nose. You had the Ford factory closing down, you had all these industrial jobs going overseas. But, what we could see in that market was that really strong population growth, government spending billions on infrastructure there with your regional rail link, heaps of money in spend on the port, which, again, we've now got the Spirit of Tasmania moving down to Geelong, which is going to be great for the tourism down there. And then obviously employment, what's driving that local economy? You've got Barwon Health is the largest employer, as you said before, education precinct with Deakin University and some of the best public and private schools in Victoria. And then furthermore, all these public sector jobs, state government sent, Vic Roads, WorkSafe, NDIS, all of these public sector jobs. If we start thinking about what happens next year, if there is a downturn in any in the economy with job keeper falling away, those jobs and that industry is there, but they're not going anywhere. The private stuff a little bit more risky. But when we start to look at those types of industries, Ballarat's representing the same thing now. You've got $460 million getting spent on that hospital. You've got, the regional rail link has been connected down there since 2015. There's a brand new train station with a conference centre and a Quest Hotel. Civic Hall is got a $100 million redevelopment. That's 1,100 public sector jobs. If you think about education down there, I'd say Ballarat's probably in a league of its own. A couple of universities, some incredible public and private schools. But the price point there, we're still under 500,000 in some cases, right? You can always spend a bit more, and land prices there since these home builder grants have gone berserk. But if we think about forward indicators, the where we've been selling in Ballarat, vacancy rates are under 2%, and as I said, we're literally getting an application on houses before we put them on the market.
Yeah, I mean, we had a previous discussion about markets like Ballarat in the last couple of weeks, and I remember you mentioned that when you've got perhaps a customer who's interested in a particular property or block of land, and you go back the next day to talk about the builder developer, and the prices moved overnight, because that's what's happening at the moment. Prices are actually moving almost daily because there's so much demand. Yeah,
that's it. Look, it's I never like letting anybody down, Terry, but lately it's the biggest problem I've had is letting people down because they go and put a deposit on a piece of real estate. By the time we go to put it down, the block's gone. So we used to be able to have a couple of days grace where I could say, listen, can I hold that block for a few days? I've got somebody who's interested, and then we can go through that process. At the moment, the land's moving that quickly, and last week alone, I had a client that I picked up a block for in Ballarat. It was packaged up for me that day. Saw them that night. I went to put the holding deposit on the next day, and it had gone up by $6,000. Right? And this is happening regularly in that market at the moment. We've seen incredible price growth in land, and no doubt that the home builder grants really pushing that along. I'd like to think that we might see a little bit of relief in that in January, but it's the prices down there are really going through the roof.
Yeah. And we're talking a little bit about regional Victoria close to Melbourne, but the scenarios that we're describing are also happening in other parts of Australia. Now, I know that in southeast Queensland, there was a report out in the last week talking about available land supply, and they like to have perhaps locations to have, say, 3 or 4 or 5 years supply sort of in the pipeline. But in most parts of southeast Queensland, including the Sunshine Coast and the Gold Coast, there's less than a year's land supply in many locations. That's been snapped up so quickly. One of the factors I wanted to talk about, and one of the reasons why land is going so fast, is first-home buyers are so active at the moment. And
why wouldn't you be? Why wouldn't you be when you've got your first home buyer grant, home builder grant on top of that, some stamp duty rebates and things like that, and then add on top of that, these flexible loans. We've got the cheapest interest rates in history, and some of the banks are doing some pretty remarkable offers for first home buyers. So if you're a first home buyer not getting in the market in 2020, you're going to miss a huge opportunity.
Yeah, I mean, I've been saying, and it sounds a little bit like a real estate agent trying to pop up in the market, but I do believe there's never been a better time in Australia to be a first-home buyer, provided you've got secure employment. Interest rates have never been low, and the level of government assistance, both at a federal and a state level, has never been higher. So there's just so much assistance out there for first-home buyers of all sorts, but particularly if you're getting a block of land and building a new home. and it's just such a great opportunity, and many are taking advantage of it. The loan figures show that the rise of the percentage of the market that's actually first home buyers. And what we've actually seen is this uplift in markets we've seen throughout this year is actually driven by home buyers rather than investors. I think investors have been perhaps sitting on the sidelines, waiting to see what happens.
And also, I mean, if you look at the last 3 years, Terry, we've gone through a Royal Commission into banking. You've had an election year. You've had, banks tightening up lending and make it difficult for investors. It's not. I mean, obviously, pandemics and things like that are going to affect sentiment. But even prior to that, there was a lot less investors in the market at that time because it was difficult for them. I think what we've started to see, especially in the last couple of weeks, with the banks, starting to loosen up on some of their lending criteria now that they've restricted some of the laws around responsible lending. We've already started to see banks starting to loosen up in some areas. So, come March, there'll be a hell of a lot easier to be getting finance. We're seeing that already, but by that stage, any of these first home buyers are potentially going to miss out on 25,000 minimum in grants that they could get readily available from the federal government.
Yeah. So the latest lending figures actually do indicate for the first time a major shift in the numbers for investors as well. It may indicate that investors are getting off the fence and starting to get involved in a trend that's being so far very much driven by various types of owner-occupied buyers, including first home buyers. Certainly, I think it's a time of great opportunity for investors, particularly with the strength of markets in the regions and the very, very low vacancies, which means great rents and great rental yields are available for people who are getting into the market now.
Well, as you know, Terry, for us, we mainly deal in the investment space. And if I sort of reflect on the year, when the pandemic first started, we started to hear whispers in March of it. We had a huge start to the year with appointments. We couldn't fit enough appointments in the calendar. And then as soon as we started to hear a little bit more about this pandemic coming along, I remember we had 27 appointments cancel in 2 days, just one after the other, just drop like flies. And it was really fascinating to see the different freakouts throughout over the months. I talk about the first part was everybody's, oh God, I don't want to catch this virus. So everybody's, taking off at home. So it was actually a freak out about virus at first. And then as the months went on, it started to be more around, job security, what's going to happen then. And then every month it sort of changed. But what we started to see, heading into July, August, for those people that maintained their jobs and could see that there was a little bit of strength in their employment, that's when the opportunistic angle came out. And that's when the investors really started to swarm back out to the market. So as I said, September and October for us were equally as big as March, which was, that's really not only promising, but I'm really thinking that early in the new year is going to be a really, really busy start to the year.
Okay. Just pause for a moment to let people know the number of people are actually putting in questions in the chat box, and encourage people to do that. We will endeavour to answer as many questions as possible. Just either on the Q&A panel or the chat box, and we'll get to those shortly. I just want to have a bit of a focus, Tim, on the qualities that people should look for in a good regional centre, and I do emphasise good, because there's plenty of regional towns out there that we probably wouldn't recommend to people. What are the qualities people should look for?
Look, it's an interesting one. I think people are often driven towards some of these regional areas purely on a price point focus. They'll go, I can get into a great home for under 400,000, but and the yield might still be extremely strong. But what worries me about that is that if you haven't identified what you're purchasing it for, what are your goals over the next 5 to 10 years, I do worry that some of these places, that have got smaller populations, they just don't have, the jobs. They don't have enough local, a strong local economy that's going to drive up price growth. So I think when I'm looking for, for regional hotspots for our clients, we are looking for a decent population base to begin with. The second thing we're looking for is that population is likely to grow And that can be through a number of factors. It could be through, jobs getting created by government infrastructure. It could be through, the Sunshine Coast is a great example, that $2.8 billion hospital. It's the largest employer in the Sunshine Coast now. You can't tell me that hasn't had an effect on, migration into the Sunshine Coast. Those are the sort of things that we'd sort of look at. And then, not only when we look at the employment nodes, I'm digging a lot deeper into that now and saying, not only, how many jobs are there and are there more ones coming, but what are those industries, right? If there is going to be a downturn in the economy, or, the word recession gets thrown around a bit now, if we start to see that, I want to know in these markets, what are the industries that are going to prop up this economy? And that's why, there, as we spoke about before, the Geelongs, the Ballarats, the Bendigos of the world, Sunshine Coast, they're the ones that, for me, because of what makes up their local economy, are what appeals to us.
Okay. I think diversity in the local economy is something we always look for. We don't want people to be investing in places where it's fundamentally reliant on just tourism or just agriculture or just the resources sector, because those can be volatile and vulnerable markets. We want diversity, a number of different strands to the economy to help them through those tougher times.
Look, I often shy away from the word boom or talk about property booms and things like that, because, a lot of the time when investors have been chasing that boom, after the boom comes the bust. We've seen that in a lot of areas when, people are, buying into mining areas and, something that is fueled by only one or two economies. We need to know that local economy is robust. It's diversification is the right word for it. We need to know that, when, something changes, whether it's, federal government changing policy, all of a sudden that sector can drop away tomorrow. So it's really important that we are looking at, what's driving that local economy.
Yeah. Okay. Now, Tim, we have the ability to unmute some of the people out there watching and listening that have got their hand raised and would like to ask a question. So, Cheryl, Katie, I know you're sitting there in the background. Perhaps you could unmute Cheryl, who's had a hand raised for a while, so we can perhaps she can ask her question live, and we can have a bit of a discussion about the issue that's most important to her.
Sure. Don't be shy, Cheryl.
Sometimes it takes a little bit of time. Are we having any luck, Katie?
Cheryl just needs to unmute herself. I've asked her to unmute.
Okay.
And Cheryl, if you just want to unmute yourself, you should be able to talk.
This is 2020 in a nutshell.
Yeah. Okay, I don't think that's happening at the moment. Perhaps we could have a look at some of the other questions. Nash is asking about Ballarat, which is I know a market that you're very active in with your clients, Tim, and one that we've been tracking for the past 4 or 5 years. And it's Nash's question is, Ballarat still expected to grow over the next couple of years, considering all the growth that's already happened over the last 2. So what are your thoughts about that, Tim?
Look, I think it's a good question. Ultimately, when we look at markets, there's markets within markets as well. So Ballarat's a big place. I think there's still some really good bargains to be had in Ballarat. I look back. I've got some clients I've just sold, second and third properties to. One client in particular, they came across from the UK and they didn't have a healthy super or anything like that. And this gentleman bought a property off me, 4-bedroom home for $319,000 in Sebastopol. Okay, that was only a couple of years ago. That's had some great growth, but that was a smaller block. There are still some opportunities in that Ballarat West employment zone. Whilst the home builder grants are really pushing prices up, I really do think that in January we'll start to see some more realistic opportunities there. So Ballarat in itself, I mean, if you're talking about forward indicators, Terry, go and have a look at what's happened at Lake Wendouree. There's houses in Ballarat selling for $4 million now. If we talk about the differential, between the higher markets and the lower ones, I still think if you can get in the market under 500,000, there's money to be made.
Yeah. I mean, we've observed Ballarat for, say, the last 3 years, and it's showing great growth. And I was starting to think, well, we must be getting to the point where Ballarat's actually reached a peak. But I think that there's actually been a second wave of demand. I think the pandemic year is actually, not a second wave of the virus, but a second wave of demand of people moving to Ballarat or wanting to invest there. And so it's resurged. So I think there's still plenty of growth to be had in Ballarat. The trend we're talking about, and I think there's actually a question from Adam asking.
I'm going to quickly finish off on that and say that the one thing I would warn people when they're looking at these markets as well, they really do need to do their own due diligence. When they're looking on realestate.com and seeing prices, understand what those prices are and then compare them from one estate to the next, because outside of build, there can be a huge disparity in price point from one estate to the next. I had a client recently, came back to me with the same size block as one that I'd showed them. There was probably $20,000 difference, but there was 8 meters of fall from front of the block to the back of the block in this estate. So going from that one to the next one, there's a reason that there's a big difference in price, and what you're going to be spending on retaining walls and clearing the site can be an enormous expense. So I do say don't just judge it based on price, really dig in and understand what you're getting.
Okay. Now Adam's asking the question, and presuming you don't have any more waves of COVID, how long will this market last? And I think this is one of the points that I'm trying to make to people, is that this trend that's driving so much demand in the regional areas is something that I think has got long-term legs. It's not pandemic driven. It was underway before that. It's been enhanced by the pandemic, but I think that period has opened the eyes of people to the possibilities of working remotely and accessing this more affordable lifestyle. So what do you think, Tim?
I'd echo that. Further to that, I would say, when we think about, the effects that this COVID has had on these markets, it's not just around, these regional areas and things. It's even the product that people have got to be thinking about now. The pandemic's had more of an influence on, how people are going to be living within these houses in these areas. So, we're making sure that when you're looking at a home, does it have 2 separate living spaces? Is there an opportunity for a study? There's going to be family working from home. There's a very good chance they're going to need to work at different ends of the house. Things like that are having a big effect. And I think the pandemic itself has had more of an effect on that than this exodus that we've been talking about. I think there's probably a bigger exodus on population going to southeast Queensland than the regional areas specifically. All of these factors that have been driving these regional areas for years, they were there well before, March came along. Yeah,
sure. We're getting quite a few questions about areas like the Hunter Valley and Newcastle. And there was a question here from Mark saying, do you think I should hold off selling in Newcastle till the middle of next year, or sell now? I'm thinking, and it's a strong market to be selling in right now, but I think with the trends that we're seeing, that there'll be better growth to be had if you wait a little while. I mean, certainly I wouldn't be selling good real estate in good locations right now because it's growing so much in value. What would your thought be, Tim?
Look, I struggle to answer a question like that without knowing the background behind it. What's the reason you're looking to sell? That's the important thing. How old's the property? What did you pay for it? What are you likely to gain? Is there capital gains expenses? I'd be more than happy if the Mark, was it?
Mark, yeah.
I will be putting my contact details up at the end of the webinar. More than happy to do an online analysis for you. Obviously, it's no charge in any of that type of thing. No. But it's really important for me to understand the reasons why you'd be looking to sell first, and then we can give you some commentary on what the market's looking like up there.
Look, I think that's an incredibly important point. I get asked a lot of questions. I'm sure you do, Tim. People sort of assume that there's one correct answer to their question. And my response often is that the answer depends on the individual who's asking the question, their circumstances. So it's really important to sit down with somebody and have a chat about your circumstances and get a definitive answer. And I would certainly urge people to take the opportunity after the webinar to follow up and talk directly to Tim about your circumstances, because that will certainly have an influence on the answer to a question like the one that Mark's asking about, whether he should be selling now or whether he should wait.
We're at the front end of our business where we're doing the initial discovery part. We don't waste time on that. That's something that's quite slow, is to understand what our clients' goals are, and that's for the purchase of a property. There's a lot of companies that just sell apartments, just sell houses, just sell new, or just sell old. We do everything, right? And it really comes down to that discovery. What are those goals that you're trying to achieve? And then we can tailor a plan for each individual. You know, what we present to that person going to be very different to the next door neighbour. And that's got to happen at the back end as well. So when you're looking to move on a property, the exit strategy, why are we doing it? And is this the right time to be doing it? What's the next step past that sale? So that's what I'll be echoing to Mark, that, you know, that's what we'd need to be looking at first, understand what the motivation behind that is first.
Yeah. There's a question there that kind of relates to, I think we've already touched on it, as to whether this trend has got longevity to it. And the question is there any chance that the remote working arrangements hold and people move back to the city offices and the regional areas drop in price in the future? What are your thoughts, Tim?
Look, I think business has changed. You know, we were lucky enough, by October last year, we'd already pivoted to all of our presentations being done like this. So we were lucky enough that we'd sort of had the foresight to start to do our presentations digitally, which made us become a national company overnight. We sort of always did service some clients interstate, but this really truly meant that we go national overnight. So we're set up to do this, you know, full time in this manner. But I think, you know, we're not the only ones. You know, I think these towers in the CBD, you know, that whilst businesses are still going to have a physical presence, you know, I can tell you our staffing here grew by over 10% in the pandemic. We put on a lot of staff. We don't have room for everybody now. So for us, you know, there's going to be some working from home that's going to happen just because we don't have the space. So that's part of it. But I think, you know, there's a lot of jobs now. You know, people aren't going to. They're not going to be heading back to those towers. Yeah. So business has changed and the world's changed this year.
Again, we're talking about a trend that's been underway for a while. It's about technology and it's about people seeking lifestyle. And it results in people actually uprooting from the cities and actually moving their home and buying a new home, a new place. They're not going to reverse that trend easily. So, you know, the working from home thing, the working from doesn't suit everybody, and it doesn't mean that the CBDs of our major cities are going to be deserted, but there is a trend of more and more people making that choice, and I think it's something that has got longevity to it. Yeah, I've seen lots of examples of what you described with the situation with Reventon, with other businesses where they've reduced their head office capacity, haven't eliminated it totally, but they've got more people, you know, working remotely because it works. It works for the business and it works for the individual.
If you don't trust your staff working from home, you've got the wrong staff. There's technology there to be able to maintain and watch what people are doing. It's not, you know, not Big Brother stuff, but you can see whether people are productive, and you've got to have trust in your staff. If you trust your staff and you've got the right staff, business just keeps on going. So I think that's important.
Quite a number of questions asking about areas like the Central Coast in New South Wales. Jenny's asking about the Central Coast. Sydney side is moving up there. Sunil is also asking about that area and the Hunter region near Newcastle. Certainly, those markets have been strong, and I think they're gathering strength as a result of this trend. And they're a perfect fit for the trend we're talking about. I guess the perfect regional centre for this trend is one that offers everything we've talked about in terms of a strong economy and diversity and lifestyle and affordability, but within striking distance of the capital city for those who still need to get there from time to time. And so the Central Coast, Newcastle, the Hunter region in New South Wales, and their proximity to Sydney and what they offer on the ground in those local economies, they're also very, very good fits for this trend, and we're actually seeing it in the numbers.
Look, I can see you've obviously got a lot of people on their webinar, Terry, which means that there's probably a lot from interstate, you know, and what I would say, or from many of the states, what I would say to anybody who's looking to, you know, take advantage of this market, you know, don't limit yourself to, you know, something around the corner. Don't limit yourself to just that state. You know, if we're talking about these regional areas, do yourself the justice of looking at a few areas and weighing them up as apples with apples. Because looking at, you know, one market in particular and then trying to find the right piece of real estate in there, you're doing yourself an injustice by not looking at the other ones as well. So that'd be my recommendation. Don't just, you know, pigeonhole yourself to one location. You know, weigh everything up.
Yeah, absolutely. Now, Jamie's asking, do these regions you've mentioned, like Geelong and Ballarat, have caps on how much development can occur? I'm certainly not aware of anything like that. Tim,
well, you have your urban growth boundaries and things like that, but obviously it does come down to local councils, you know, how much land they want to release, and, you know, that's an important factor. You know, there's there's some areas that are getting created in a lot of markets where there's 15 years worth of land supply. And as we know, if you're buying a piece of real estate here today, it might be a block of land, build a house on it. We want a reason why someone's going to come and pay a premium off me in 5 to 7 years. But if they can buy a block of land further down the track, and build their own brand new home for a similar price, that's going to affect your resale. So it is really important that you are looking at how much land can be released around these areas. I'm a big fan of infill sites. If you can find things that, I had a client last night, found a beautiful little infill site in a completely enclosed estate in just south of Brisbane. Things like that. That was what they were looking for, because they're like, we want some quick uplift, because we're not going to sit here for 10 years waiting for it. We've only got a couple of years before retirement, and that was a factor for them. So Geelong, Ballarat, there's certainly a lot of land available in some of those areas. That's why it's important that you're selecting the right ones, and I'll be looking at getting close to master planned communities, nice and close to the town centres.
We're also getting questions, Tim, on various locations in Queensland, and certainly Queensland, regional Queensland is a wonderful fit for the trends that we're talking about. You and I have discussed the Sunshine Coast many times, and it continues to be one of the strongest markets in the country. But it's a great example, I think, of the sorts of regional areas that are going to do extremely well as a result of the trends that are currently in play.
Yeah, absolutely. Look, we can talk about Sunshine Coast if the cows come home. I'm a massive fan of that market. You look at, I often show clients a video. It's on, I think Sun Central put out a couple of years ago. So it's a 2017 video, and it tells you about all of the infrastructure projects that are going to come. And you're watching that now in 2020, and 80% to 90% of those are completed. You're talking the international airport now. As you know, Terry, I spent a lot of time working in international markets in real estate, and I spent a lot of time in Asia. When I lived in Miami, and I was trying to get Chinese to buy into Miami, and they love luxury, but they wouldn't buy in Miami. I mean, they'd buy. We get a few sales. Don't worry about that, but we wouldn't get the volume. The reason that they wouldn't buy in Miami is there was no direct flights. They had to come in via Dallas or San Fran or LA. They wouldn't buy there. Now, you look at the Melbourne, Brisbane, Sydney markets with great Chinese investment going in there. That hasn't happened in the Sunshine Coast yet. As of July this year, the Sunshine Coast has now got direct flights to Asia. You watch what happens with a market like that, and that's just one factor. That we look at that the submarine cable that's I think that's due to get connected to the Maroochydore CBD next month. It's going to be the fastest internet cable in Australia, on par with Sydney. You've got big companies going to set up their national headquarters in Australia at the Sunshine Coast, half the price of Sydney, and you've still got that all the technology of a green city. It's unprecedented what they're doing at Maroochydore.
Yep, absolutely. I mean, the new medical precinct. I mean, that's a $5 billion precinct. It's a new industry that didn't exist there before. I think that's really important. It's brought a lot of new people to the Sunshine Coast to live and work, and many of them are well paid, and the top end of the Sunshine Coast market in particular has risen very strongly. The new CBD, you mentioned the airport expansion going international. There's a lot more. There's $1 billion being spent on the motorway on the fringe of the Sunshine Coast as well. $20 billion in total, $20 billion plus. So it's that's one of the factors to look for, that big spend on infrastructure. And you've mentioned other examples like the hospital upgrade in Ballarat. Factors to look for. Susan was asking about Toowoomba. I don't know whether it's a market that you've shown.
In the triangle there. Look, it's one of those things. I haven't done much in the Ipswich Toowoomba sort of area, and it's because, again, I think it's part of the food bowl there. I think I personally, for the dollar value that you can get there, I think I can find better markets that have got stronger local economies and a bit more industry that will prop it up. That's my opinion. I'm not saying that you can't find good real estate within all of these markets, but every time I get asked about a particular market, I'll give you my general feedback on it, and that for me is that I think I can find better value elsewhere.
Yeah, I think Toowoomba is one to watch because of what's coming up with infrastructure in the future. When the inland rail link is a huge piece of infrastructure that's underway, and it's Toowoomba's pivotal, and there are other things happening there as well. Definitely one to watch. Tamara's asking about Warrnambool, and it's an interesting one for me because what I noticed with this trend initially, Tim, was that it was the regional cities that were within 1 to 2 hours, say, of Melbourne, or, in the case of Sydney, the Central Coast, Wollongong, places relatively close to their capital city are doing best. Warrnambool is a little bit further out, but what we've seen in the numbers is that there's been really good price growth in places like Warrnambool and Mildura and Albury-Wodonga as well. So they're a little bit more distant from the capital cities, but they're getting uplift from this trend as well.
Yeah, no, look, I'd probably sooner go towards your Milduras and your Albury-Wodongas myself, just mainly because your radar anteriors that are going through to in between capital cities. Warrnambool, I've seen some of the growth that's down there. I'm certainly not an expert on that market. I know the university and things like that there, but I'm not sure exactly what's propping up that market with such incredible results, to be honest. But look, for me, as I said, I like the idea of the major highways going through these arterials, like your Albury-Wodongas, the great logistics hub, things like that.
Yeah, one thing that's happening for Warrnambool recently announced there's an upgrade to the rail links between Melbourne and Warrnambool. That'll have an impact. I mean, it's just a good, solid regional centre in its own right. Coastal, nice lifestyle, very affordable, and it's a place that that people are considering. But it's a little bit more distance from the capital city. But it's interesting to see what's happening there. There's a question from Nicola about the Southern Highlands in New South Wales, south of Sydney. To me, it's a little bit on the fringe of this trend because for me, I call it the exodus to affordable lifestyle, and it's not so affordable. The Southern Highlands, very, very expensive market, wonderful place, wonderful hill change towns, but actually quite expensive. And I think it's actually more affordable markets not too far from there, like say Goulburn, halfway between Canberra and Sydney, and places like Nowra that are more affordable, that are perhaps getting more uplift.
Once your price point comes up a little bit, the thing that worries me, these areas have a glass ceiling on income. Right?
Yeah,
that's the challenge. You're not going to get, unless it's there's something very unique, you're a Noosa or something like that. But you've got to have something that's going to drive up your incomes, because without the incomes going up, without that population growing significantly, it sort of goes in that order too, doesn't it? You need the jobs to get the population, and with the population growth becomes more jobs and the incomes start to rise. But if you're already getting in at a higher price, you really need incomes to jump up for your price growth to jump up too.
Yeah, and markets like that, I think, are perhaps a little bit more about tourism and retirement, and we're generally favouring, aren't we, Tim? Those places that offer perhaps more diversity in their economy, more in terms of employment nodes. So perhaps
some good public employment as well. I think that's important, not just looking at all private employment stuff, to have some public sector or some government jobs.
Yeah. And that, there was a question earlier. Someone was asking about Orange in New South Wales. Vesna, I think, my thoughts on Orange. Orange is a place that I think is a beautiful fit for this trend, and it does have a lot of public sector employment. A number of these New South Wales state government departments have their headquarters in Orange, but it's also got manufacturing. It's a wine district. Gets a lot of tourism. It's got a major gold mining operation, which is another element to its economy. Just a lovely place, and so I think we rate it quite highly.
There's a lot to like.
Yeah,
a lot to like. Yeah.
Yeah, certainly. Question from Vicky about Townsville. Townsville was actually a long way from its capital city, but nevertheless, we talked to people on the ground in the industry in Townsville, and they're same as everywhere else. They're pumping, they're busy. First home buyers are active. They're selling a lot of land. We're getting people moving there, getting out of the cities as well. Has it sort of flashed on your radar screen at all, Tim?
A bit far removed for us, but look, unfortunately, the only time Townsville comes up in conversation is when people have bought there, I'm afraid. And I think, that unless prices have sort of come back and you're getting into the market a bit cheaper than you were some time ago, it's been a market that hasn't performed all that well for people that have overpaid in the past. I think they had a bit of a spike in prices and people paid a bit too much for it. I must say it's not on our radar at the moment, but not to say that it won't be in the future.
Yeah, sure. We're getting a lot of questions about locations, specific locations. we're actually just coming up for the hour. We're just not going to have time to answer them all. It's great. We've had particularly good numbers today, Tim, for this webinar. It's obviously a topic that's of great interest to a lot of people, a lot of consumers out there, and we're getting lots and lots of questions. And we just haven't got time. But I would urge people to follow up, and you're always welcome to drop me an email if you've got a question, but I would urge people to actually make contact with Tim at Reventon. And I think Katie in the background is going to just put up a graphic where you can see how to make contact with Tim, Chief Operating Officer of Reventon. You've got an email address there and also some phone numbers. So what's the best way for people to get in touch, Tim?
Especially if you're looking for information specific on suburbs. Look, I've got access to a lot of data, CoreLogic and Residex and everything like that. Even if somebody wants a free suburb report, shoot me an email, tell me what you're looking for. I'm more than happy to shoot back an email with a bit of commentary on the market, providing I know it. But either way, it costs you nothing to get a free suburb report, which can have some predictions on growth and things like that. More than happy to do that. Yeah, email's probably best. Okay,
now look, we could go on for another hour just dealing with the questions that are here, and we do try to keep these webinars confined to 1 hour because it's in people's lunch breaks and people have got to get back to work, etc., etc. So it's probably a good time to call a halt, and I'll urge those people who didn't get their questions answered or are just interested in property investment and would like to discuss their situation with an experienced professional. I urge you to make contact with Tim Graham from Reventon. And thank you, Tim, for your time today. I think it's been a great discussion. I think it's been on a topic that's clearly of great interest to a whole lot of people because it's we're talking about markets that are really pumping and people as investors really want to be part of that.
Yeah. 100%. Terry, thank you very much for having me. It's always a pleasure. Hopefully we'll be able to head out for dinner again sometime soon, face to face, because at the moment it's all been TV dinners.
Oh God, I almost can't remember what I mean. One of my favourite things to do is to go out to lunch or dinner at a great restaurant in Melbourne. But God, it just seems like another life, doesn't it? That when all that sort of thing was possible.
And a long time between drinks for a few of us. We've, I think I've been to one restaurant since we opened because we're still very new to us. I'm only back in the office on Friday, so we're looking forward. We've got one of the staff's birthday on Friday, so I head down to Beer Garden or something. So everyone's looking forward to that.
Okay. All right. Well, good luck with all that and with the market. And thanks again for your participation. And thank you to everybody out there watching and listening. We had particularly strong numbers today. Lots of people tuning in live. More questions than we had time to answer, and I apologise for that. But you're welcome to follow up with Tim and also with me, Terry Ryder at Hotspotting. So that's it for now. Let's do it again soon, Tim. Bye for now.
Thanks so much. See you, everybody. Thanks so much. Bye.